day, everyone. I have with me today Shreyas, Slater, Chitlaya, the managing partner for Elevate and Vedas Group Asia. Shreyas, thank you so much for joining us. And
pleasure to be here.
Talking today about why family offices are embracing digital assets. Of course, the very first question in my mind is that, digital assets, crypto space, it has been roaring. This year, 2025, has been a fantastic year for digital assets. And I think in US, the market cap crossed US for 4 trillion. And US has also come with a series of recommendations on legislations that can be released to make US an absolute leader in this space. Mm-hmm. But there's always a little bit of skepticism when you talk about digital assets because, we've seen this euphoria before, and then there have been crypto winters, digital asset winters as well. Mm-hmm. So how would you say it is different this time? And if it is, then how is it different this time?
Sure. Thank you. Pleasure to be here. They're very interesting questions. I think there has been a maturing of crypto mainly through finding the product market fit in Bitcoin and stable coins, and then the different derivatives of how you play those markets or play those assets. Each cycle, there's been a little bit of an evolution of what drove the euphoria and then ultimately the crash. Each time it has been something internal to the crypto market that has kind of caused the chaos and volatility. And then the subsequent fallout was what happened with FTX and with the Terra Luna chain. Basically bad actors that are not necessarily endemic to the system. Although one of the interesting points is, if people held on to FTX, they actually invested in Anthropic, and Anthropic is now 200-300 billion value, and most people would have been made whole. Actually, they were close to being made whole. But as things have evolved, the biggest challenge that all of crypto faced was certainty and clarity around regulation. And that, I think, was the biggest challenge for institutional capital to come in because there was uncertainty. How is crypto treated? Is it a token? Is it a security? Is it a commodity? Then the tax treatments, and all of this led to most of the innovation happening outside of US, in Singapore, in Switzerland, in other parts of Asia, in the Caribbean. So ETFs have made the adoption far easier. Then you have stable coins. Stable coins are another way of institutional capital finding a legitimate use of crypto and then putting a lot of capital behind it. Stable coins now, they are about 250 billion. They're probably the 12th largest holders of US treasuries. And they now move more volume than Visa. So that is a big use case. And now one of the aspects of the Genius Act is to properly legitimize stablecoin. And stablecoin issuance, the regulations, what it takes to be compliant. The big uptake of stablecoin is largely driven by currency fluctuation and volatility outside of US. So when you are trying to invest in the next evolution of the financial system, this is a natural natural starting point. And so you can get access to some of the gains, returns, and the ecosystem by just getting into some of the companies like a Coinbase, a Circle, a Robinhood, because all of these are enabled by people that transact in the crypto ecosystem. So whereas you as an investor can be exposed to that as a family office without necessarily having to take a position on any particular crypto. And that's, I think, is particularly relevant because you've seen many of the altcoins in each cycle do not survive. And the best performing asset classes within crypto have really been Bitcoin, Ethereum. There was, Solana did well, but then you don't have many of the alts. You have some of the memes. And Solana, one of the benefits it had was from the meme coin explosion. And that was a very extractive proposition that really did not help retail investors. And I think that there was a particular way and game that that was created in order to benefit certain set of people, the issuers, the celebrities, the market makers, all of them. So we've gone through these different iterations. There's been a lot of hype to try and see, okay, a lot of enthusiasm to naturally build things, but what we really see in adoption is around, called digital gold in Bitcoin and international remittances, money flows through stablecoin.
Makes perfect sense. So my next question would be, Shreyas, that family offices, by the way they are created, or by the basic mandate that they have, they are conservative, right? Family wealth preservation is the main criteria for often creating a family office. While on the other hand, digital assets, crypto, Bitcoin, or whatever we are talking about, they are more volatile. While you did put in those numbers of, the volatility vis-a-vis S&P, but if you look at a broader horizon, so then in your conversations with family offices, how are they actually looking at this more volatile, or has there been a re-education where they don't consider it that volatile, but how is it finding a place in the portfolio of family offices which have a different mandate for being set up actually?
Sure. So I think traditionally you would say in terms of asset allocation, you'd put 5% in VC or in the more alternatives, and you put maybe 1%, 0.5% into crypto. Yeah. The Sharpe ratio of it having exposure to Bitcoin actually improves the portfolio because in the years that it goes up substantially more. Crypto as an asset class has grown faster. I mean, now we're seeing AI as a competitor to that, but has grown faster than any other asset class in history, and Bitcoin and being the best performing one. And now you've seen with the inflows to ETFs, both with Bitcoin and Ethereum, that is a much easier way to play. And you see that now the price performance, now that you have the certainty as family offices being risk averse, if there isn't certainty of how regulations, and even internationally, because you've seen different regulations based in different countries. Now you're starting to see standards, global standards. And so it's now more a risk of do I miss out? And FOMO. Yeah, FOMO is a driver of behavior. But I think you see the bull case, or just keeping on Bitcoin, is definitely far greater than the bear case. You've seen that play out over time. Part of this, and when you say kind of go into the next the derivative of that, is these digital asset treasuries, which are an interesting way of playing Bitcoin. Ethereum is getting there, but not nearly as much. Now you have 25 of the corporations holding over 100 million of Bitcoin on their balance sheet. And some of which are whole, but many of them have adopted a digital asset treasury strategy similar to what MicroStrategy has done. Metaplanet is, of course, the big one outside of US in Japan. And so as a corporation, you have a lower cost of capital, so you can buy at better terms. That said, many of these two trade at a price that is a premium to their net asset value. But the benefit for them is that they can issue more shares and acquire more assets, so more tokens. And in that you have Bitcoin and Ethereum. And also, as a family office, one of the theses is that why would I take a speculative view or a trader's view of accumulating Bitcoin on balance sheet when I may have 50 million, 100 million, even $1 billion, but that doesn't compare to a corporation that has several multiples of that. And so you can get exposure if you believe in the thesis without having to take a price perspective.
Absolutely. Makes perfect sense. Last question, Shreyas. So we've been hearing a lot of news about family offices getting involved in tokenized real estate, credit on chain, tokenized art. And in your conversations with family offices, how do you see this? Is this the future of finance? Is this the future of transactional activity in finance space that family offices would be taking up? Or is it like a more, just a fad which will go away?
With crypto, like any other asset in finance, you start with something simple underlying, like you had stocks, you had bonds, and then you have different financial products that were built around them, securitization, then derivatives. So you then trade or transact in assets that don't deal with the underlying asset, right? You're taking a notional view of a stock or a property. So tokenization is two sides. So it goes back to, do you participate in the actual evolution or novelty of the next phase in terms of taking a position on tokenized art, NFTs, etc.
Yeah.
Or do you take a position that this is here, people are adopting it in an increasing manner, and then and invest in the enabling securities or enabling companies that allow people to participate. If you buy an NFT for the first time, it's a novel experience. But then there are other companies like Arweave and many of the other blockchains that allow you to participate in that ecosystem. At the end of the day, it's about making things transactable, and that's what tokenization enables. It's a lot easier to take position on a fraction of an asset that you may not, a piece of art, a property, even a stock, right? So now Robinhood is going to, and the other Coinbase are going to introduce tokenization of traditional financial assets. Yeah. So this allows, just like the reverse familiarity, where people that were used to buying stocks and transacting in traditional financial securities had a traditional method of doing that. Now it's kind of going back the other way with crypto natives having had familiarity with a MetaMask or a Trust Wallet to now being able, or Robinhood, to being able to transact on traditional financial assets. So it actually benefits both markets, because when you transact, you have to have some level of sophistication of options or the different types of ways you can purchase. So that is an enabler of bringing people into more aspects of the financial system.
Absolutely. Makes perfect sense. And I think for me, one of the key takeaways would be that if you see financial returns, why would you not get involved in it? Eventually, that's the work. Even if you're a family office or any asset allocator, you are in the business of getting returns from your investments. Whether it's like, through ETFs or whether it's through tokenization, that's a choice that people take.
Yes, exactly. That's correct.
Yeah. Perfect. Thank you so much, Shreyas. And thank you. Please leave your comments for us to take this conversation ahead.
Thank you.